Hello everyone, welcome back to the channel. Please subscribe if you like the content. Statutory audit is a type of audit which is mandated by a law or a statute to ensure the books of accounts presented to the regulators and public are true and fair. It is performed by a qualified chartered accountant who is independent of the business. Statutory audit is an audit which is prescribed by different statutes like the Reserve Bank of India, Income Tax, Companies Act, etc. A chartered accountant needs to conduct many audits as per the different statute requirements. Statutory audit of banks is mandatory. Statutory auditors are appointed by the RBI in association with the ICAI. Every year after the end of the previous financial year, in every branch of the banks, a very rigorous audit is conducted. The process to conduct a statutory audit. The statutory auditors should ensure that the audit report issued by them complies with the requirements of revised SA 700, forming an opinion and reporting on financial statements, SA 705 modifications to the opinion in the independent auditor's report, and SA 706, emphasis of matter paragraphs and other matter paragraphs in the independent auditor's report. Nowadays, all statutory auditors are given a time frame in which they have to undertake the audit of the branches that are allotted to them. An auditor should immediately accept the appointment, send a formal communication to the branch management, and all other information that he would require in his audit. The auditor will have to ensure that their report should include the quantification of advances, deposits, interest income, and interest expenses. The important elements to check in the statutory audit of banks are cash verification procedure, tax-related items, and verification of loan accounts. Cash verification procedure. The auditors have to verify the cash balance at the branch at the end of 31st March. An auditor should follow the below-mentioned checklist for cash verification, whether the branch is getting opened at the time as per the guidelines and the branch manager is present at the time of the opening of the branch, whether the cash vault or cash safe are being opened by the joint custodians, whether any unrecorded security items or documents are kept in the cash vault or cash safe. The branch should maintain the records for the acceptance of currency from the public. This also includes the records of the mutilated notes, proper working of the burglary alarm system, whether all the other doors are locked at the time of the opening of the cash room. The gun should remain outside the cash room at the time of opening and closing of the cash room. The cash should be carried out in a locker box from the cash room to the counter and vice versa. The cash counting machine and UV lamps should be in a working condition. Tax-related items. An auditor will also have to check all the tax-related items and compliances that are applicable to the bank, like TDS, Form 15H, and so on. The important elements to check and compliance are mentioned below. The tax should be deducted at an appropriate rate on the monthly, quarterly, or yearly payments made by the bank towards interest on deposits, rent, payment to contractors or professionals, etc. All the tax payments should be on time, and all the challans are there in respect of each payment. All the tax returns are filed on time. TDS certificates should be issued on time, and Form 15G or 15H are collected and sent on time. Comment on the quality of compliance if the bank is under concurrent audit. Check if any RBI has been audited in the past. If yes, then whether the same is closed, and comment on the quality of compliance is to be seen. The branch should have the copy of the insurance policy obtained by the corporate office. The branch should have the lease document with them. The branch should take balance confirmation from other banks in which it is maintaining the account. Explanation of the outstanding entry in the system suspense account, if any. Verification of loan accounts. Loan accounts form a major part of the assets for banks. A statutory auditor should check the loan accounts very cautiously. The verification of loan accounts is divided into three parts: preliminary check, disbursement, and post-disbursement inspection. Preliminary check. The banks should do a preliminary check of all the accounts before considering the project for evaluation. An auditor should look at the following documents for checking the bank's preliminary process: loan application, prescribed application form, KYC compliance, project report, projected profit and loss, balance sheet and cash flow statement, latest audited financial statements, board resolution for availing the credit facilities, all government departments registration and technical review. Disbursement. The bank should have a proper check on the active accounts. The important elements that a statutory auditor can check are as follows. There should be an acceptance letter duly acknowledged by the borrowers for all the loan accounts. Execution of the loan documents should be as per the terms and conditions of the sanction letter. All the original documents are held in safe custody in a fire-resistant safe. Confidential report and NOC from the existing bankers, CIBIL report and score. The bank should check for any adverse comments, valuation of securities, external and internal credit rating, due diligence certificate, verify the drawing power of the accounts is calculated properly and a margin is maintained as per the sanction letter, verify any adverse comment on the stock audit report or the audited balance sheet, verify the payment schedule as per the sanction letter is implemented. If any, check the approval document for the same. The auditor should check for any non-performing asset, NPA. All accounts which are overdue or stop generating income for the banks continuously for 90 days, then it must be treated as NPA. Audit report. After conducting a thorough audit, an auditor has to give an audit report for the same. An auditor is required to make a report as mentioned in the engagement letter, in which they have to state the following: whether the balance sheet is showing a true and fair view containing all the necessary particulars to exhibit a true and fair view of the affairs of the banks, whether the profit and loss account shows a true balance for the period covered by such account, whether any transaction has been carried out by the branch which was not within the powers of the branch, any other matter which the auditor considers to be brought to the notice of the statutory central auditor. Long-form audit report, LFAR. Besides the normal audit report as per the statutory requirements, the terms of the public, private and foreign sector banks require the auditors to furnish an LFAR. The matters which the banks want the auditors to check have been prescribed by RBI. The time limit for submission of LFR is 30th June. An auditor should plan the audit for timely submission of LFR. An auditor can give an executive summary of the LFR if they feel it's required. Hope you enjoyed the process of statutory audit in detail. Please like, share and subscribe for more insightful content like this. Thank you and happy auditing.